Okay, I want to turn to another topic, perhaps a little smaller one, which is ethical investment. When shareholders say we're going to sell oil companies, shares in oil companies, and try and guide companies to be more ethical. What do you think?
Well, I think there's a massive misunderstanding around this issue. It really relates to a distinction between primary and secondary transactions on the stock market. Most transactions on the stock market are secondary, and that means that they are trades in existing shares between investors. So one investor buys shares, and those shares are sold to him, or it may be an institution, by another investor. And the company itself is not affected. And that means that when investors say, well, we don't want to be invested in oil companies, we don't want to be invested in alcohol companies or gambling companies or defense companies, they can achieve that and they can feel good about it, and it is, arguably it's morally better, but it's not actually affecting those companies as long as there are buyers for the shares that are then sold. It's only when there's a primary transaction, when a company is actually raising money by issuing new shares, that the company is directly affected. So unless there is a long-term lowering of the share price because there is an overweight of selling, there are more people selling the shares than are willing to buy them, so the share price becomes depressed and stays depressed, that's when there could be an effect. Because when the company then comes back to the stock market and says, we want to raise some more money from the stock market, it will be more expensive, because for the company, they'll have to issue more shares to get the same amount of money. So in that sense, there will be an effect. And if we return to divestment, another issue is, what are the institutions or the people who've sold the shares, what are they going to do with the proceeds? They've got to reinvest them somewhere. And the question is, what possibilities are there for investing the proceeds in companies that are directly tackling sustainability issues? There are possibilities of doing that, but it's a risky strategy, and it's rarely something which, for example, if it's a pension fund, does the pension fund want to take serious risks with the capital that actually belongs to the pensioners? So, it's about what you do with the proceeds.
So basically, virtue signaling is a lot easier than being virtuous.
Very well put, yes.
Okay, let me turn to another topic, which is about the traditional antipathy, the enemies that labor and capital were, or are supposed to be. Do you think that labor and capital should be, are really enemies?
Well, I certainly think they have to be, and I think we should leave ideology aside, at least for a while, and talk about the practicalities, what's actually happening. And there are a number of ways in which we can see that the antagonism between labor and capital does not have to be so. I mean, one example is the German social market, that capitalism actually, there are variations of capitalism, and continental European capitalism is rather different from the Anglo-American variety. And if we look at the German social market, what it means is that organized labor, particularly in the form of, in the form of trade unions, has a statutory backed influence, constraint, and sometimes a veto on the strategic direction of corporations. And that's a very different situation from Anglo-American, where leading companies like Walmart and Apple and Amazon have gone to enormous extremes to prevent unionization. So there, the antagonism between labor and capital is still pretty fierce. But there are other examples. I mean, the whole cooperative movement is quite strong. It's even strong in North America. And cooperative companies in agriculture and finance are doing well in their sectors, and they often beat, in terms of performance, traditional companies where there is a clear distinction between shareholders and producers, shareholders and employees, if you like, of the company. So, and there are a number of other ways in which the whole notion of labor and capital always being antagonistic have been softened in practical terms. One more example is the idea of employee share ownership plans. And that's a situation where the profits of the company are shared out amongst employees who get an allocation of shares as part of their remuneration. So there are, and I could go on, there are many other mechanisms. So I think it's important to put ideology on one side and look at what happens in practice.
Good.